Hello everyone! Now that we have a good grasp on what supply and demand is, we're going to take it a step further and talk about how we can visualize these concepts with something known as support and resistance. Support and resistance is most commonly referred to as SR and is at the center of technical analysis. All of your favorite indicators and strategies revolve around this fundamental concept. From a trading standpoint, we're going to want to remember the following. Be a buyer at support and a seller at resistance. Well, what does support or resistance even look like? First, I want to break down these concepts and hammer them home. Support is where there is excess demand. There are clear buyers present in the market, and they're willing to buy an asset at certain price points. Resistance, on the other hand, is where there is an excess of supply, meaning there are clear sellers in the market and they're willing to get rid of an asset at certain price points. Now, as we can see in this example, support is defined by the upward slant in price action. Whenever price starts to fall off, we see demand step in and push the price up higher and higher. Conversely, here we see resistance defined as a downward slant in price action. As price tries to move higher, we see supply being dumped on the market, causing the price to go lower and lower. In both cases, the direction of the trend is determined by the imbalance between buyers and sellers. One last important thing to note with SR is that the underlying strength is determined by the volume of would-be buyers and sellers. This is represented by something known as open interest, but that's a topic for a bit later. For now, all we need to understand is that SR becomes weaker the more it gets retested. Now, let's break down the two types of SR in any given market. The first and most obvious would be diagonal support and resistance. Oftentimes, these are referred to as trend lines. A valid trend line is defined by price making at least 3 touches along a given line. Now, it's important to note that trend lines can be very subjective at times. This is because some traders choose to draw them from candle body to body, while others may prefer to draw them from wick to wick. The truth of the matter is that it does not matter which style you choose, as long as you stay consistent. As mentioned earlier, traders want to be buyers at support and sellers at resistance. As a buyer, the best time to enter a long position would have been whenever price fell down and bounced off support here. On the other hand, sellers at resistance look for similar touches in the downtrend. Here we see that traders looking to enter short positions would have done best selling whenever price touched resistance. Now let's flip gears a bit and talk about the other type of SR, horizontals. Horizontals, by definition, are levels of SR that price is unable to breach. Horizontal lines actually help us define what is known as a range-bound market, but we'll get into that a bit later. Now, horizontals don't need to be at a fixed point. They help define SR zones. Here we see a horizontal support. Whenever price came near the horizontal, demand stepped in to push the price back up. However, as we mentioned earlier, the more a level is tested, the weaker it becomes. After a 5th touch, there were no more buyers present to continue pushing the price up, and it eventually gave way to supply. Now let's take a look at what a horizontal resistance zone looks like. Here we see one that was able to suppress the price down over the course of many sessions. However, after a 5th test of this zone, it gave way to demand and buyers pushed the price up. The rule of 5s is a very useful strategy when it comes to trading, but we'll save that for later. For now, let's move on to some live examples and see if we can identify some of these concepts in real time. Now here we have our 4-hour Bitcoin chart. Let's see if we can identify some support and resistance. Well, here we see a diagonal resistance with 3 touches along the line, making it a valid resistance line. On the 4th touch, we weren't able to break through. But on the 5th touch, however, buyers stepped in and effortlessly pushed the price up higher. Now, I also see a horizontal support line. Do you? Here we can see a very clear indication where buyers were able to push the price up whenever price came near the horizontal. Now, if we shift gears and look to the left, we'll notice that this area used to be a resistance level. This is what's called a SR flip. As traders, we're going to want to identify SR flips in real time. The reason being is that they provide access points in the market, opportunities for traders to make money by taking profitable positions in the direction of the trend. So let's circle back and make sure we understand the key takeaways from this lesson. Support and resistance are physical illustrations of supply and demand, depicted through price action. SR can either be diagonal or horizontal. Now, the strength of SR is determined by the would-be buyers or sellers. The more a level is tested, the weaker it becomes. And finally, as traders, we want to be buyers at support and sellers at resistance. Now, in the next lesson, we'll explore various trends and learn how to identify them using supply and demand. See you soon!